A very good afternoon and evening to everybody. So just going to take a recap of what's happened today so far. So initially, pre-market, we saw JP Morgan reporting their Q1 earnings. Quite a big beat on their EPS, was expected at $1.17, came in $1.31, and they also beat on revenues as well, so helped buoy markets initially with those numbers. We were lower initially in the European markets and US stock futures following the poor or worse than expected results out of China overnight with their GDP reading, which came in weaker than expected. And then after this we had some US data, so we had the CPI readings, that came in line at 2.7%, and then later following that, after the Wall Street Open, we had the University of Michigan Consumer Confidence. Now before this data came out, we did have some market talk that it was going to be weaker than expected, and actually it did come in slightly lower than expectations, so not too much market reaction on the back of the actual figure, was slightly priced in. We did actually make a bit of a move higher when that number was released because it wasn't quite as weak as expected from the market talk. Now since then as well, we've had comments from ECB's Knott, who said that the bond buying programme is still there and encourages, discourages the use of it and doesn't think it's necessary at the moment. So that's quite interesting considering the spotlight that's fallen on Spain. Spain also announced they're going to be issuing a 10-year bond via auction next week, so a lot of focus will be on that. A lot of market participants were looking at the results of that to see how Spain's getting on and the investor appetite. Now looking ahead to Monday, we've got some US data, we've got retail sales, and we've also got French T-bill auctions. But for the time being, that's enough from me for this week. We'll see you bright and early on Monday morning, but in the meantime, have a very pleasant weekend.